All right, good evening, and thank you for joining us. It's Budget Day on the 1st of February. I'm Faye D'Souza. This is Live with Faye. My three guests who are with me this evening have been having, we've been meeting every Budget Day now for 14 years. We do this every year, and what we would normally do is talk about how the budget announcements affect your investments, if there are any changes you should make to the way you invest your money, or is there any intel here that you can pick up that will help you invest better? So as to not waste your time, I can tell you that there was nothing in this budget. So this is effectively a social conversation between my three guests and me. But what we're going to do instead, a lot of the other environmental challenges for our investments continue. The stock market, for example, what's happening with real estate, what's happening with our interest rates, what's happening with our inflation, oil prices that continue to rise up and what that's going to do to our household budgets. So we can continue to talk about all of that. And I remember it was about, I think, 8 years ago when Dhirendra Kumar said the budget should not be an event in your investment decisions at all. That has come true. It is
finally, it has happened, yes.
It is not an event anymore because nothing that was announced in the budget actually has any direct impact on your investments at all. So you shouldn't be making any sort of decisions based on what's happened at the budget, but we are going to, because we've got this stellar panel together, we are going to use this opportunity to just talk about your investments and answer your questions. Rachna Chatwani, thank you so much for that contribution on our YouTube page. To introduce my guests, for those of you who don't know who they are, Anuj Puri, the chairperson of Anarock Property Consultants Private Limited, is one of the strongest voices on real estate in this country. Mr. Shailesh Haribhakti is the chairperson of Shailesh Haribhakti Associates, understands tax and understands business and the way the business community moves better than anybody else in this country. And of course, Dhirendra Kumar, founder CEO of Value Research, a voice that I have relied on personally for over 15 years. Gentlemen, good evening. Happy Budget Day to you. Thank you for joining us. I'm going to actually start with Mr. Haribhakti. Mr. Haribhakti, good evening. It's such a pleasure to have this chat with you. I thought it was interesting that this budget was talking about the next 25 years. But unlike what we are normally used to, we didn't hear any of the numbers for this year. So there was no talk about how much money is going to be spent on health, for example, which is so important given our experience over the last 2 years, or education or agriculture and things like that. Would you say there was enough of a takeaway, or is the budget becoming more and more of a non-event in our lives?
No, in my view, there were a few very significant takeaways and which can influence investment decisions, Faye. So the first takeaway is the fact that we will have a central bank digital currency. And the fact that a new asset class has been recognized. Some people call it NFTs, some people call it virtual digital assets. There are various terms used, but it's the same thing. Basically, the representation of that asset and the value of that asset is derived from what you can get. To give you an example, you could have an NFT for an artwork, which can perhaps let you view it, let us say, for 24 hours, or to display it for 24 hours, and it would have a different value. Whereas if you want the provenance and the possession, then the NFT would have a very distinct, different value. And for the first time in India's history, we have recognized these digital assets as something that can be tradable, because if you can't trade it, you can't get a capital gain from it. And so the given wisdom in the crypto world, and there's a very interesting fact that your viewers might want to know, that the largest number of people invested in crypto assets in the whole world are Indians. And the sum total of Indians who are invested in crypto is almost equal to the rest of the world. And it's just astonishing how this has taken off.
If forgive me for interrupting you, it also says that there will be a 1% TDS on every effective crypto asset. So the government has made it very clear they do not see it as a currency, they see it as an asset on every trade. Now, the trades are difficult to track because there's no trace. That's the whole point of blockchaining, that there's no trace of what you're doing with the money once you've put it into the exchange. How does the government plan on implementing this?
No, so Faye, we will have to see the way that they will administer the trading. The trading happens on platforms today like OpenSea, which is a global exchange. But there would need to be that trackability because of that 1% TDS. That's what changes the whole perspective. The minute you do a transaction in a NFT, you will have to report it first voluntarily, and then there would be an information exchange between OpenSea and the government of India. And so the transactions could become known. And then the TDS applies, and if you actually sell and make a gain, there's a 30% tax, no offset of any loss that you may incur. So it is a pretty heavy dose of taxation, which gives you a hint about what the government thinks of virtual digital assets or NFTs.
Yes.
But the big thing, why the bank Nifty fluctuated so much during the day is because of this CBDC announcement, whereby if you have a central bank digital currency, and if people adopt to it very rapidly, then one of the functions of banks, which is payments and clearance, would be taken over by a completely different platform. And the fee income that arises from that would be taken away. So this is a question of disruption of all intermediation in the financial system. This is the first view of that potential disruption, and therefore the markets, swung a little bit during the day. But I'll stop there because this is an interesting new thing that came up for me.
I want to bring in Mr. Dhirendra Kumar because we had this conversation less than a few days ago. We were talking about cryptocurrency. At a taxation of 30% flat, which means no offset at all, the government has recognized crypto assets by wrapping it on the knuckles. And effectively, a lot of people are going to say, what's going to be left on the table after that 30% tax? Do you think that this is going to dampen a lot of the interest in that asset?
Yeah, I think, the government was actually cornered to a point where it was not in a position. What Mr. Haribhakti actually just narrated about the numbers, the scale of it, and the number of investors who have participated in this market. So government was not in a position to ban it. At the same time, when you have the RBI governor and the prime minister, they say that, we are there. Government's primary role is to actually, their ability to print money and actually keep track of it and be able to tax them. And anonymity itself, which is actually being touted as one of the fundamental, character of what is being talked about, that disappears. So from what I could actually get sense of it, that government could do that. So now they have created a whole new, they have not recognized it as an asset of a usual kind. It is an unusual asset for which they have created a new section, whereby if there is a capital gain, they will be taxed. If there is a capital loss, there won't be, you can't really take credit of it. But, I will have one question from Mr. Haribhakti on this aspect, about which I'm a little unsure. that within the crypto assets, will there be offsetting possible during a financial year? But that apart, there is one more thing, government has not been done thoughtlessly. There is much more to it. For example, if you have an asset, if you have a position and you acquire it and then you move that currency into your private wallet and then you use it for buying something, then the gains will be recognized and you have to pay the taxes. For example, if you have Bitcoin and then you use that Bitcoin to pay for buying a Tesla, so you are not recognizing a gain here. But the government says they have actually provided for in the law that you have to recognize the gain, the price at which you bought, and the price at which you are able to turn it for the worth of it, and pay 30% taxes on that. So my sense is that government didn't want to, but it had no choice but to tax it in a manner that at least it comes in the framework.
Mr. Haribhakti?
To answer Dhirendra's specific issue on what happens on all the transactions you do during a year. So when the adoption becomes so high that people are moving between fiat currency and crypto on a kind of seamless way, then they will have to start making sure that you have a fairer regime, because otherwise it will be impossible for people to track. So suppose I'm moving in and out of a Bitcoin, let's say 100 times in a year, which is quite possible. Like you said, you want to buy something, or you want to, some people may take the view that I want to use it as a store of value. So I'll just buy it and keep my Bitcoin and wait for it to go up in value, in which case it becomes a straightforward thing. But the whole idea of digital currency and digital asset ownership is to transact and trade. And there are more and more companies all over the world who are saying, we'll accept payments in digital currency. So it's not just the Bitcoin, it's Ethereum, it's Solana, it's Dogecoin, it's a multitude of coins that will be traded. And then you have all these NFTs. The entire Bollywood and the entire cricket fraternity wants to convert themselves into digital personalities. And all of us will have a situation where we could have an avatar of ours actually participating in some ancient event because of the way that NFTs and AR, VR operates. But to me, the big signal is that we are getting into Web 3.0. We are getting into very high tech. We are getting into 5G. So that is all very fascinating. This is a budget which is making India future ready.
Okay, it's a budget that's making India future ready. It's interesting. Although, and I'll come back to Dhirendra about what there was there for any of the rest of it. But just to bring Anuj Puri in, the really only relevant announcement here was an allocation of 48,000 crore rupees for 80 lakh houses under the Pradhan Mantri Awas Yojana for the coming year. Per house, that actually comes down to not a lot, Mr. Puri. It's interesting. I'm curious to see how the government is going to execute this plan, because if I'm not mistaken, we're talking about 50,000 rupees per house under this plan, which will be a bit of a challenge. But what is your reading of the announcements made for real estate that are relevant to real estate?
First of all, Faye, I'd like to be on your show. No budget is complete until the three of us are here. So now it looks like, yes, the budget day has happened that we are on your show. So thank you very much for having us and having the patience. Certainly with the real estate sector, having the patience for 14 years. Every year we think there's going to be an announcement that will be made, which is going to be of significance on the real estate, and there isn't. But honestly, this year, Faye, I was happy that there wasn't any announcement made, because things are going right for the real estate sector. Sometimes, yes, you want more. But this time I was quite reluctant that there should not be an adverse news that breaks the sentiment. Look at the GDP is doing well, employment is doing well, sentiment is positive, stock market was, up there. And suddenly if there was more on tax or something like that that was going to come in, and we would have felt is that that may have broken the sentiment. So once, yes, we are greedy, but from my perspective, I was actually delighted that there was nothing that was going to break the sentiment. The second point
Anuj Puri has been the eternal optimist for 14 years. I can tell you that for sure. There has not been a single budget he has rejected.
Market genuinely is doing well, Faye.
I remember, having some argument with him many years back when I was of the view, based on my experience in the North India, that, all these guys are a bunch of crooks and, nobody should be buying home. And you thought otherwise, and you were very optimistic even then. But, lot has happened since then. RERA happened, and now it is in action.
Yes. And a lot of consolidation, Dhirendra, has taken place now. And, you have a lot more better quality players who are delivering.
Absolutely right.
Real estate. So directionally...
No, but Anuj, I want to disagree with you, if I may, please. You did say, of course, that employment is going well. The numbers don't support that. There aren't as many people employed as they were 3 years ago in our country, where we haven't created the jobs. Younger people are hitting the job force, and they're not getting jobs at all. Employment is a huge gap at this point. That we know for sure. We know that our oil prices are reaching a point where inflation is going to start to hurt as well. So we have households right now where people have lost jobs, and it's becoming more and more expensive to run the household because of inflation. Now, there is no solution in this budget at all on the demand side, in order to either encourage people to spend more money, save more money, invest more money. There hasn't been any of that. So there is a gap there.
So Faye, the home buyer, who we are classifying as the urban home buyer. And for the urban home buyer, there has been a lot of opportunities, which is largely in the IT field. Okay. And so, we're seeing a lot more take up in that. You're absolutely right, Faye, where you're saying is that the unemployment has gone up, but it's largely at the bottom of that pyramid. The majority of the home buyers are in that 1 to 3.5 crore category, which is where it's largely the professionals, the IT folk who's doing it. The other point, Faye, I was wanting to make was on the affordable housing, what you said. So directionally, over the last 6-7 years, if you look at it, every year, the finance minister has focused on affordable housing. And this year also, it was 48,000 crores. It said 80 lakh homes. But Faye, out of that, 56 lakh homes are already which were budgeted for, if you read the fine print. So actually, it is the difference between 56 and 80 that the 48,000 crores is going for.
Okay.
So that's how the math really adds up for each of the house. But
Anuj, we've also hit a couple of the deadlines that this government had started with in their first term, a home for every Indian. The smart city project that we talked about till we were blue in the face, that has completely vanished. The 100 smart cities that we talked about and all of the work that was done around it, we haven't heard about it for years now. So there are the risk with these long-term next 20 years, next 10 years type of plans is that they tend to vanish.
But Faye, having said that, the government had said is that they will do 1 crore 25 lakh affordable homes. And out of that, a significant portion they have been able to deliver. Because of the COVID, the last couple of years, there has been a delay. But otherwise, they have been pretty much on the target. As I said, it's 56 lakh homes that have been, that are going to be delivered this year. And in addition to that, another 24 lakh homes. So 80 lakh homes by the end of this year will be delivered out of the total target that they had of 1.25 crore. Homes. Yes, I agree with you on the smart city that dialogue has, not been as much in news as what it was when the announcement was made on the smart city. But equally, Faye, on the real estate side, some sort of finer prints, finer points that have been said. One is on the data centers. They have given that as an infrastructure status. So you're going to see a lot more investment coming in on data centers. The second is, this logistic parks. 100, I think it's called Gati Shakti, logistic park that is going to be made. So clearly, those are some of the asset classes that you're going to see investment coming in from overseas.
Right. Also, and I'll come back to you on this, Anuj Puri, to is there data audits of these homes being delivered? I mean, we know the government announces and says these are the number of homes we're going to build, or these are the number of homes we delivered. But is there any audit being done of these homes actually being delivered, being handed over, the quality of the construction that we're talking about? If we're talking about such large amounts of money, I'd be curious to know that as well. Going back to Mr. Haribhakti, and this is a very important point that Anuj made. He talked about the pain being at the bottom of the pyramid. And there's a lot of talk also about a K-shaped recovery that we're seeing in India, where basically the rich, the organized, the listed businesses have done really well because they profited from the pandemic. They were able to take in a lot of the jobs. So for our audience, for example, a plumber, a neighborhood plumber that you would have called to get something fixed in your house, you now use Urban Clap. So that job, which was an unorganized job, has now become an organized job. So you have these companies that have managed to suck up all of these extra jobs during the pandemic. A lot of the official companies, the organized companies, have taken over this extra space, and the pain of the loss of jobs is at the bottom of the pyramid. From the point of view of an economy like ours, Mr. Haribhakti, all our businesses are standing on that bottom. Is there a possibility, if we don't do something to help that bottom, that our economy will suffer?
Faye, that's a fantastic point you make. I have the following views. One is that I'm beginning to see for the first time that the government is attempting to deliver universal basic services. What they are thinking of doing is leapfrogging, because we didn't do enough of it so far. They're trying to leapfrog into the digital era, and they are trying to provide, let us say, for the children who missed 2 years of education, access to digital education in centers that they will actually set up. Now, that is a very new idea, and it's a leapfrogging of the concept. Similarly, telehealth, telemental health, all of these are directionally, to my mind, trying to attempt to reach the bottom of the pyramid with services which are of far superior quality than they would have been if we had done a halfway good job in the past and left it where we usually leave things. So to my mind, we must wait. The jury is out. If we are able to actually enhance the quality of people's education, the quality of healthcare through these interventions, I think we would have done what I would like to call the first traces of universal basic services. I know that 3 lakh crores are going to be spent in rural areas and to change the whole character of the farm economy. I know that Gati Shakti is going to receive 2 lakh crores this year. The largest outlay in this budget is on Gati Shakti. Gati Shakti is all about making movement possible. So it covers everything: roads, ports, airports, railway, all of this. And when you add all of that up, the quantum of money that is going to go into this is 2 lakh crores, no less. And the quantum going into rural economy is 3 lakh crores. So somewhere all this money is going to reach the people who are living there and who are going to get the benefit of that service. So I would like to watch, and I love the idea that you talked about, Faye, an audit. Somebody should be able to tell us. We should have an accountability mechanism for every budget. And I'm a strong believer in that. If we do that, we will see far superior voluntary compliance. So I'll stop there, but I think there is something new that seems to be emerging.
In fact, the central government's main auditor, which is the Comptroller Auditor General, the CAG, as we call it, the number of audits that CAG does on an annual basis has come down sharply in the last few years. We see fewer and fewer audits from CAG, which doesn't help us, because as citizens, we need to know where this money is going, because it's effectively our money. Dhirendra Kumar, I want to understand from you what you think is going to happen now in terms of our investments if we look at the environment, if we look at the stock market, and we had this conversation about how the stock market is doing, as you know, in connection to that, how mutual funds are going to do, and where you see it, you know, what your advice is right now for our audience at this point.
My advice is that, what I've been telling for all these years, if somebody has heard that, then keep doing it. Long-term money into equity, short-term, medium-term money into fixed income, and be ready for, lower return on your fixed income, because that is what it is. And maybe, and if you are in bond funds, then, if interest rates go up, it's only a matter of time. And, we are little unsure of the scale, but it'll go up. So deposit rates and other things will definitely go up a little bit. But that apart, bond funds will actually suffer as a result of it because of the inverse relationship that we have. So be ready for that. And if we are going to have inflation, then, it becomes all the more important for people, for investors at large, to have equity exposure. And it is becoming all the more important. It's becoming very challenging for people who are about to retire, close to their retirement, because, that India has largely been a fixed income country. And getting to know the equity, the upheavals, and, the understanding the risk in the correct manner. Because, people just think that volatility isn't risk. If you actually speculate, that could be risky, where your capital can disappear. So how do you get used to it? And there is no coaching that will help. You have to really experience it. Because once if you are faced with a March 2020 situation, when the market goes down by 30% in 2 week flat, no amount of teaching or anybody giving any kind of imparting knowledge will help. So, one has to really go through it, and that can be done only gradually, whether you do it with NPS, whether you do it with a SIP. And I think something remarkable has happened in the last, couple of years. I don't know what has contributed to it, but definitely it's not a small beginning. I've always thought that, of all the segments of the financial services industry, mutual fund is the only segment which has a lot of happy stories. Of course, housing could be one where, a lot of people are, living, having the shelter. But as an investment, I don't consider housing, the house you live in, as a capital asset, or, which you buy for appreciation. Of course, it could vary for different people, but mostly it's your home. And you don't value it every day and you might just feel happy if a house is sold in the neighborhood, but that's about it. In case of mutual fund, there are a lot of happy, investors. And, I'm quite surprised at the gradual scaling up of, something like 10,000 crore rupees flowing into mutual fund every month by way of SIP. Whether it be, mutual fund Sahi Hai campaign, or investors experiencing it, or, other word of mouth, whatever. And that I think is a very remarkable thing. And that has been more than, that also acts as a great support or a counterbalance to the foreigners behaving erratically in our market and adding to the volatility. So investors must learn how to invest in equity. If you can't learn, then, do it with small scale, because there is absolutely no substitute to trying it out, and do it as soon as possible. Because if you don't do it, the risk of outliving your savings is quite alarming.
So effectively, you're saying continue to invest in equity, but expect volatility in the short term. You also said that it's likely we'll see inflation go up. So do you think interest rates are going to go up, which means our fixed deposit rates and our home loan rates will go up as well?
Yes, very much so.
Okay. So fixed deposit rates going up would be good news then for the retired investor, for people who are senior citizens who rely on that money.
Maybe not, because, the first level of, the savings vehicle for senior citizens is the senior citizen savings scheme, or, post office MIP. And that is where the government did not reduce the interest rate when, in the first place. So I don't see those, and that has created its own rigidity. We have seen the interest rate going down on all instruments except for these, including PPS. So, I don't think they're going to go up in a hurry because so there may not be a good news there.
Mr. Haribhakti?
Yeah.
So for senior citizens, and this is something that we've talked about in the past as well, for senior citizens who rely on fixed income for, there are a couple of things they rely on: fixed income, rental income, things like that for their, for their income to run their houses. Do you see interest rates going up?
I generally agree with what Mr. Dhirendra Kumar said, but I have a bit of a counterpoint, which I'm sure would be interesting to your readers, to your listeners. First point is that the dis-savings that were happening in the public sector are getting controlled because the bad apples are getting sold or are getting into a situation like Air India, for example. They were losing tons of money every month. That has been stemmed. Similarly, Neelachal, take, for example, a fallow asset like Neelachal Steel. Now it is in the hands of Tata with a 12,000 crore increment to the kitty. So I see the savings in the economy going up, not because individuals might be saving more, but because the negative savings of the public sector are reducing considerably. So that's the first factor. The second factor is that we did not participate in the helicopter money concept that many of the Western economies participated in. And we just didn't print money to scale. We gave up some of our food stocks. We managed our fiscal deficits in a far better manner. In the first 7 months of this year, the PD is less than half of 1920, not of the previous year. So these are important things to note. And the glide path to getting back to less than 4.5% fiscal deficit has become visible through the finance minister's statement today. So I think this is a dampener to inflation expectations. Now, if we are lucky enough to get a break on oil prices, or if we are lucky enough to get a far superior adoption of climate change and of energy transition and all the rest that has been talked about, then we may get away with the between 4 and 6% inflation range that Reserve Bank is wanting to track for. So that is a counterpoint that I would make on inflation based on what I've seen in this budget today.
A quick question for Anuj Puri. Anuj, if we see interest rates go up, which means home loan rates will go up as well, do you expect that to hit real estate buyers? Also, we saw a bit of a trend where people felt that they don't need to be as close to the center of the city because everybody was working from home, but you needed more space at home. So people were actually moving away from the centers of the city. What impact has that had?
So two things, Faye. On the first one, if the home loan rates do go up, not only just in monetary terms, but also sentimentally, it does have an impact on the sale. So it will absolutely have an adverse impact if the interest rates continue to go up and the home loan rates, which are hovering around 6.5%, if they start to climb. And coupled with that, Faye, there is a possibility that with the input cost going up, with the inflation input cost going up, that the prices of real estate will start to go up. We've seen in the past 5 to 7% over the last 1 year, the prices have gone up. So if you combine both interest rates going up and because of the input cost, not necessarily because the developers are wanting more profit, but because the input cost is going up, the prices of real estate going up, it can have an adverse impact. The second point is very true. We've seen not only people moving to bigger apartments, better apartments, more open apartments, but they are moving towards the periphery of the city or to the suburbs. They used to be in the central business district. Now they're saying, we're not going to go to the office every day of the week. we may go 2 or 3 days. And I think this is here to stay even post-COVID. If you were to survey most of the offices, they will confirm is that they don't expect people to come in every day of the week. The people want flexibility, and hence they're very happy to go a little bit further down. The other thing that we saw, Faye, and when you were speaking with Dhirendra on the investment part, is that millennials for the first time disproportionately have bought residential. And it is for their social security. Exactly what Dhirendra was saying is that they are not looking at this as an investment. They are, and maybe they are being forced by their parents. Maybe they are being forced by the spouses or girlfriend or boyfriend or whoever. They are, and I'm surprised with the amount of people in the age bracket of late 20s to mid 30s who used to be always thinking asset light. And suddenly they are saying is, well, we need a roof over our head, we need social security, and hence we will buy it. Also, I think is a lot of the building societies, differentiated if you were a tenant versus if you were an apartment owner, stricter rules if you were a tenant, and a little bit more liberal rules if you were an apartment owner. Lots of these millennials, when they come and buy, we ask them the question, 3-4 years ago, you were like, we're never going to buy at 2% yield. How does it make a sense? And there are several explanations that either the parents or social security or that the landlord has behaved, improperly during the COVID times, that they are saying is we don't want to be treated as second-class citizen, and hence it's not as much of an investment as it is for their social security that they would be looking to buy.
I agree. Totally.
That's really interesting. I just, like I said, there hasn't been that too much that has happened, but I do want advice from each of our panelists before we wrap up this conversation on if there's anything that you would advise the average salaried taxpayer to do this year. Mr. Haribhakti, is there, the government has given us a little bit of a window if we make an error in filing our taxes, which is welcome and which is nice, but is there anything else?
So I would advise investors to go for a little more debt than they have been used to, because the volatility in equities will be very high. And I believe that this is an opportunity, because we just saw a complete upward shift in the coupon rates on the G-Secs, or the yield to maturity on the G-Secs today itself. And so I would say move a portion of your assets to debt.
Dhirendra, do you agree? I have a feeling you might disagree with that.
I generally disagree, because investors don't have a sense of they can't, if it might be useful, it might be good, or maybe doable for Mr. Haribhakti and me, but not for common people, and they should be more guided by their own plans. The money which you don't need for next 5-10 years can well be in equity, even if you have to, even if you see an intermittent decline in there during the period. The loss is not a loss till it is, but don't compromise on the basics, which is diversify, invest regularly, and till you actually book a loss, it is not a loss. So in that sense, unless you walk away from the market. So work on that basic plan: diversify, invest regularly, long-term money into equity. And what the lesson from this whole pandemic and all the crisis that we have seen in recent times is that have a more liberal estimate of your emergency fund, the money which you might have, which we might need at a time. Then having all the basic, foundations well in place, having the health insurance, having the life insurance, working towards having a home in a manner that, you are not stretching beyond a point. You are within your means. And of course, there is no better thing than actually being in a job which you are able to save. You are important, and having a growing career. That is something, that's the best return on investment of your time. So if or a profession or a vocation or whatever you are in. So if you are able to do that, investments actually get easy.
Anuj, Puri, your advice?
So as far as an investor is concerned, Faye, I would say is do not invest in residential real estate. It is not for an investor. It is not for a speculator. The prices aren't going to run up that quickly. Yes, prices will go up, but they're going to go up 5, 6, 7%. I mean, it's not for a speculator or investor. It is really for end user. If you are an investor, then look at REITs. Look at the IPOs that are going to come up. Shailesh, my guess is there will be tons of these IPOs that are going to come up of the real estate developers.
And the asset monetization by Government of India.
And, hopefully the asset monetization that is going to come up when the divestment starts from the Government of India.
Gain momentum.
Yeah, that's right. So I do feel that is where the investors should do it. Residential, certainly not fair. I don't think the prices are going to run up like, 20% or 15%. They aren't. So as I said, yes, they will go up, but my guess is it's in the range of 5 to 7%. Also, Faye, this time the developers are very sensitive to their cash flows. Unlike in the past, when the markets have come back, greed has overtaken fear. I'm seeing this time maturity with the developers saying is we want to make sure that we delever our position, get in the cash flows, get the sales momentum continue. Yes, we will pass some part of the cost input increase that has happened, but we're not going to break the back of the home buyer.
It's very interesting. Fundamentally, and my colleague Amita just pointed out that the advice has actually been steady now for the last decade, which is make sure that you're doing what is best for you. There is no blanket solution across the board that you can use, which means that you need to be looking at what your risk appetite is, the number of years you're going to stay invested, what kind of returns you expect, and the purpose of your investment. Make sure you get good advice before you make any big changes to your investments right now. There are some interesting takeaways from this budget. Nothing particularly for the salaried person. Nothing particularly that should at all affect your investments. That's something you should continue to do based on your needs and not use the announcements of the day to make any alterations. If people have been investing in cryptocurrency, we will do a separate discussion for you over the next couple of days on what this would mean for the money that you're already holding in that cryptocurrency investments and what you should do with that money as well. Gentlemen, thank you so much for spending time with us this evening. It's a pleasure to speak with all three of you.
Absolute pleasure, Faye. Always a pleasure.
Thank you, Mr. Haribhakti.
Thank you very much.
We'll be back at 9 o'clock this evening
to
talk to Professor Santosh Mehrotra and Mr. Raghunathan on the economy and what these budget announcements will mean for the economy as well. The news is also going to be up at 9 o'clock, so take a look at that. Thank you so much for watching.
Thank you.